I spent 6 months backtesting 50 trading strategies across 1,247 trades, and only 3 of them actually made money. The rest, they'd have wiped your account by week 2. Now, before you click away thinking this is another top 3 strategies video, it's not. I didn't just Google these. I ran every single strategy through 6 months of historical data on gold, NASDAQ, and euro to US dollar. Real entries, real stop losses, real results. Here's why this matters. The average retail trader blows through $4,700 before they find a strategy that works. That used to be a statistic. After this test, I understand exactly why. Because most strategies that look incredible on a YouTube thumbnail fall apart the moment real market conditions hit them. But, and this is what kept me going through months of spreadsheets, 3 strategies didn't just survive. They were profitable in trending markets, ranging markets, and high volatility news events. So here's how the test worked. Every strategy got the same conditions. Starting balance $10,000. Risk per trade 1%. No compounding. Flat lot size the entire time. 6 months of data from July 2025 through December 2025, which included 3 Fed rate decisions, 2 NFP shocks, and the November election volatility. If a strategy couldn't handle those conditions, it doesn't deserve your money in live markets, period. I tracked 5 metrics for each strategy. Win rate, average RR maximum drawdown, profit factor, and the one nobody talks about, consecutive loss streaks. Because a 60% win rate means nothing if you hit 11 losers in a row and panic quit. Therefore, let's start at the bottom. The strategies that don't just fail, they fail spectacularly. F tier, the account killers. First up, Martingale. Doubling your position after every loss. This strategy had a 67% win rate, which sounds great, but the average winner made $47, while the average loser cost $312. After 200 trades, the account was down 84%. One bad streak of 5 losses, and you're not recovering. Ever. Grid trading? Same category. It works beautifully in a range, until it doesn't. When gold trended 400 pips in November without retracing, grid traders lost everything. The backtest showed a 91% drawdown. That's not a strategy, that's a coin flip with extra steps. News straddling, placing buy and sell stops before NFP and hoping one triggers in profit. Win rate, 41%. Average R to R, 0.6 to 1. Profit factor, 0.43. You'd literally make more money doing nothing. Therefore, if anyone is selling you courses on these strategies, they're making money from the course, not from trading. D tier. These strategies have fans, they have subreddits, they have gurus, but the numbers don't lie. Basic RSI overbought/oversold. Everyone's first indicator. Buy when RSI hits 30, sell when it hits 70. Sounds logical. Win rate, 44%. R to R, 0.8 to 1. Profit factor, 0.71. Over 200 trades, you lost $2,847. The RSI was designed in 1978 for commodities. Markets have changed, the indicator hasn't. MACD crossover, same story. Win rate, 46%. But here's the killer. It's a lagging indicator. So by the time it signals, you've already missed 40 to 60% of the move. Your entries are late, your stops are wide, and your R to R collapses to 0.7 to 1. Bollinger Band bounces, stochastic crossovers, basic moving average crosses, all D tier, all between 42 to 48% win rates with sub 1 to 1 reward ratios. Therefore, these aren't useless tools. They're useless as standalone strategies. That distinction matters for what comes next. C tier, the break even after fees zone, Fibonacci retracement entries actually showed promise. Win rate, 52%. R to R, 1.2 to 1. Profit factor, 1.14. You'd have made $847 in 6 months on a $10,000 account. But after spreads, commissions, and swap fees on a typical broker, that $847 becomes $112. You worked for 6 months to afford a mediocre dinner. Support and resistance with candlestick confirmation. Win rate, 54%. R to R, 1.1 to 1. But it requires constant screen time. I calculated the hours. Roughly 3 hours per trade of chart analysis. At $112 profit per month after fees, you're earning 37 cents per hour. Therefore, C tier isn't about bad strategies. It's about strategies that can't overcome the costs of execution, which brings us to the strategies that can. B tier. Now it gets interesting. Order block trading with displacement confirmation, win rate, 57%. RR 1.8 to 1. Profit factor 1.67. After fees, the 6-month return was 14.3%. That's real money, but the win rate dropped to 41% during ranging markets. If you can't identify when the market is trending versus ranging, this strategy will chop you to pieces in the wrong conditions. Supply and demand zone trading with multi-timeframe confirmation. Win rate 55%. RR 2.1 to 1. Profit factor 1.82. 6-month return 17.1%. The multi-timeframe filter was the difference between this landing in C tier versus B tier. Therefore, B tier strategies work. You could trade them profitably for years, but they have conditions and failure modes that limit their consistency. A tier had 2 strategies that were strong but not remarkable enough to change your trading. I'll list them on screen now. Because S tier, this is where I stopped being a tester and started being a believer. Strategy number 1. Asian session liquidity sweep into London displacement. Here's how it works. You mark the Asian session high and low. You wait for one side to get swept in 30 minutes before London open. Then you enter on the displacement candle in the opposite direction, targeting the other side of the range or the next major liquidity pool. Win rate 63%. Average R to R 2.7 to 1. Profit factor 2.41. Maximum drawdown 8.2%. Consecutive loss streak never more than 4. 6-month return 31.4%. But here's why it's S tier and not just good. It only requires you to be at the screen for 45 minutes per day. London open, that's it. The setup either happens or it doesn't. No ambiguity. Therefore, if you want one strategy to master first, this is it. Strategy number 2. Multi-timeframe order flow with SMT divergence confirmation. You identify the higher time frame direction using market structure. You drop to the 5-minute or 1-minute for entry. The confirmation? SMT divergence. When correlated assets make different structures, it signals institutional positioning. Win rate 59%. R to R 3.1 to 1. Profit factor 2.63. Drawdown 6.7%. 6-month return 37.2%. The catch? This strategy requires understanding of institutional order flow, market structure on multiple timeframes, and the ability to read SMT divergence in real time. It took me 3 weeks just to learn how to identify the setups. But once you can see it, you can't unsee it. Strategy number 3. Displacement continuation at macro times with fixed risk. This is the simplest strategy on the list. At specific macro times, 9:50, 10:10, 11:10 a.m. New York time, you look for a displacement candle in the direction of the higher time frame bias. You enter on the next candle. Stop loss below the displacement candle. Target 3R. Win rate 54%. R to R 3 to 1. Profit factor 2.18. Drawdown 7.1%. 6-month return 28.9%. It's S tier for one reason. It requires almost zero discretion. The time is fixed. The entry is mechanical. The risk is predetermined. You will never sit at your desk wondering, should I take this trade? You either see displacement at the macro time or you don't. Done. Therefore, out of 50 strategies, 1,247 trades, and 6 months of testing, 47 strategies either lost money or barely broke even. 3 strategies delivered between 28.9% and 37.2% returns, with drawdowns under 9%. But here's the part nobody wants to hear. Every single S-tier strategy requires one thing that F-tier traders refuse to accept: a broker that doesn't eat your edge. Those C-tier strategies that made $847 and turned into $112 after fees on a zero-spread broker with same-day withdrawals and 500 to 1 leverage, 3 of them would have graduated to B-tier. Your strategy is only as good as the infrastructure underneath it. I've been running these 3 strategies on MagnoFX's Act Trader platform, and the execution is the reason the backtests actually translated to live results. Zero spreads means your R to R stays exactly what you calculated. Same-day withdrawals mean your profits are yours today, not in 3 to 5 business days. Links in the description if you want to test these strategies yourself on an infrastructure that won't sabotage your edge. If this saved you even one blown account, drop a like and subscribe, because next week I'm live trading all 3 S-tier strategies in real time, so you can see exactly how they look when real money is on the line.